Hello, and welcome to Lodestar's Lending Leaders. I'm Jim Paolino, founder and CEO of Lodestar Software Solutions. On this podcast, I'm going to be talking to leaders in the mortgage and real estate industries. Our goal is to talk about current events, interesting things from their end of the industry, and anything else that we feel is fascinating. Leaders. Excited today to bring on a friend and very special guest, Matt Patterson, Executive Vice President of Business Development at Draper and Kramer Mortgage Company. Our goal here is to, as always, bring you different views on the lending industry, different folks who are leaders in there. And I think Matt very much fits the bill here. So very excited to hear from him and have a fun conversation. So Matt, thanks so much for coming on.
Thank you for asking me to join you today.
Absolutely. So curious, to get started for the listeners here, currently you're in sales role at Draper and Kramer. What has kind of your industry path been to that point? Has it always been on the sales side, or is that something that, over time you kind of fell into?
Well, I started in 1982 with Wells Fargo and worked for them for several years and moved on to a local mortgage banker, worked for there for a bit, and then worked for a company named Superior Mortgage for 25 years and was president of that company when it was moved over and sold. And so I started in the loan officer piece in the early 80s, and then I just kind of moved through most executive positions of a company over time. I joined Draper and Kramer 5 years ago, and it's been a great experience with them. And my role today is a little bit oversight of sales, a little bit product development, a little bit looking at, executive items and with our executive team. So it's a little bit diversified, but most of my focus is trying to help loan officers grow their career and their production.
And I know from working with you for the past few years, just the growth that we've seen in the company has been fantastic. So, kudos to you and the Draper and Kramer team for that. I know you had mentioned, I didn't want to necessarily date you, but you already pulled out 1982 as the starting year. So I'm going to consider that free range to ask you some questions there. So you've had, I guess, the perspective of going through the savings and loan crisis, the dot-com burst, 9/11, the Great Recession. And how do you kind of view those impacts on the industry versus what's happened in 2020? I know the word unprecedented has probably been used more in the last year than any other year combined. So how are you viewing kind of this past year versus the years before it?
Out of those crises that I've been around to be a part of as a person who's seasoned for a long time in the industry, I would say that the hardest one was the 2007. And I would say that last year, I experienced it inside of Draper and Kramer. We were probably more prepared than other lenders. We were already working in Microsoft Teams. We were already in the Microsoft suite of products. We were already had our people deployed with laptops. So literally, when that crisis came along with COVID, we just said, everybody, hey, close up your laptops and go work from home. And it happened, the transition happened very rapidly for us. We also have a really strong leadership team with Paul Lucan and Brett Stefanski who understand the capitalized markets very well. So it allowed us to navigate a lot of those pieces along with our other executives. So it was uniquely different, yes. But I can say I was very fortunate to be a part of and a leader at a company that was more prepared for something that was unprecedented and not expected.
And obviously there's been a lot of benefit to the industry in the last year and a lot of good problems to have. That's a phrase I probably use about 5 times a day now in my conversations. But what were some of the problems that you had never seen before over the last year?
Well, I think some of it, if you start kind of on the sales end of it, the artistry of being a salesperson, a lot of that was face to face. So for our salespeople, we had to probably do a little more talking about, working in an environment where everything was not done with a good amount of face to face. So that I wouldn't say was a challenge. It was more of a dialogue. Operationally, I think it was probably needed to look at our reporting, rely on our reporting a little bit more because we weren't seeing, say, head underwriter wasn't seeing their underwriter sitting in an underwriting area and the closers weren't, manager wasn't seeing their closers there. So I would say the transition piece there was in the mechanism of moving a loan along was more starting to become reporting based, and emails started to flourish more and Teams phone calls started to flourish more. So it was more like habitual business habits that were changing so that you weren't losing the same efficiencies. And of course, we all know in the beginning, there was, adjustments in warehouse lending and loan guidelines and some non-QM investors pulling out of the marketplace. So that was maybe our biggest challenge, in the sense that we have to look and say, were we able to take care of the consumer base that was looking to us to have a loan, had a loan in process, and now that loan's not available. So you kind of have to walk your way through that.
And then just dealing with the sharp changes in interest rates and how that's going to affect everything else in the funnel. Yeah. We definitely saw a volume spike initially when everyone was being able to disclose loans at a low rate. And it seemed like it kind of settled down to a point below that now where it's manageable for people, but still a lot of companies pulling their hair out right now.
There's a lot of volume going on in the industry, and it does make a time labor demand, and everybody has a certain amount of energy they can carry for a period of time. And so, that is a balance.
You had made a point earlier about the loan officers and kind of the individual borrower-facing salespeople having to adapt. How have the successful ones done that?
Well, I think, a few years ago, we had a meeting and it was saying, hey, what does the loan officer of the future look like? If you're a call center, you kind of have that more strategized. I think in the retail side of it, where it's relationship driven with your realtors and your builders and your financial planners, what we started to do actually about 2 years ago is we started to build this entire booklet of all of our selling behaviors and how we were interacting with all those people. So how we addressed it was, we spend several hours every week, individually, myself and another person, meeting with our loan officers, and we literally go through everything they do. What's your first phone call like? What were your realtor visits like? How do you do those Zoom calls with your realtors today? Are you really using your CRM to help you out now? Before you might have went out and walked in a real estate office, talked to an agent, and got a verbal referral. Now you got to attack that in a different way. So we have what we call a loan officer playbook, and it's very thorough. And we work that with our loan officers, and it really goes into the art of selling for themselves, for their business, the use of our vendor products. Are they really using our products to their fullest? How can we expand that? And that's been a big key for us in working to make sure that our loan officers adjust it. Kind of one of the funny things I share with people is we had one loan officer when we had done we try and do 3 reviews a year, and we had done his last review in 2019. And we said, hey, you're not using our mobile app that much. The clients can do all these things on our mobile app. And the loan officer said, no, I meet everybody face to face, and I don't need it, and I'll probably never need it. Now we meet with him. He's like, thank God I got that mobile app. My clients sign their app docs on it. My clients, check their loan status on it. My clients upload documents on it. So it's really, COVID has really forced a transition in all throughout the world in comfort level with online use, whether it's buying a product or getting a mortgage or looking for a car. So we literally have mapped our way through that and increased our technology use quite a bit. And a really interesting thing that's happened is our loan officers now are spending more time talking to the consumers about product comparisons and talking to the consumers about the value of the transaction that they're going through and what should be the value of their loan term, and what are their cash out options, where is the best place for them to look for their new loan size on a refinance. So I feel that our non-mortgage statistical part or data part is shrinking in the use of the technology, but our communication with the consumers is going up. And I really think it's actually better. It's really making us integrate to those consumers. Let's face it, a mortgage is a big choice. And having them talk more about the value of the loan itself versus the statistical data is a big help.
So do you think by looking, and one of the things I see when we talk to loan officers and listen in on loan officer conversations, the ones that I think are really successful say, what does this refinance mean to you? What are your goals? It looks at that transaction as a part of what the person's doing and almost has a fiduciary responsibility to help them. So do you feel like the transition to looking at it that way and utilizing those tools happened solely because of COVID, or was the industry kind of slowly working its way towards that?
Yeah, I think the industry has been working its way towards that for really two reasons. I think if you kind of take a transaction, there's the art of the sale in the beginning, and then there was the mechanism of fulfilling it through operations at the end. And with technology moving, you look forward and say, hey, can the mechanism take more of the sales piece? And that allows us to make the transaction maybe a little bit smoother to the consumer, maybe a little bit more of awareness to the consumer. And in a way, loan officers looked at it and said, oh, hey, if a client can fill out an application online, that's kind of like taking my value away. But the opposite side of that is, no, it actually gives you the value time to spend with a consumer to help them make the right and appropriate choice through having data that you can share with them. So, using products like Lodestar for our fee structure, using products like Mortgage Coach or MBS Highway, these products are helping us to transfer information to the consumer so they can make the very best choice for themselves. So our time allotment has changed with the technology, but that just all happened more rapidly because of COVID.
That makes a lot of sense. And you had mentioned with some of the tools upfront is there's the technology that's used upfront for the loan officer conversations and leveraging that so they can have more of that kind of one-on-one time with the borrower. What have you seen later in the process change in terms of technology from by the time you're processing the loan, underwriting, and even closing? Has that been accelerating or different in the last year?
Yeah, there's been some nuances that have happened there too. Our mobile app product has, the ability to be integrating during the loan process. So now a processor can just go in and they could type in, hey, I need another pay stub, and it can pop right out and the consumer gets a little, message notification on their phone. So it's affecting us while the loan's moving through the transition. And then of course, now there's a much faster emphasis to say, can we start to go to remote online notaries? Can we go to hybrid closings? Can we start getting into that piece a little faster sooner? Not every state fully allows all those. And there's some terminology differences or nuances in the industry. But essentially, I think on the backside of the transaction, what's happening is the development of, the MERS registry for online, kind of the library of mortgage notes nationwide, and then the e-vaults, and then MERS having the library to know where every mortgage note, what e-vault it is in the country, is all that's going to kind of like stack to the consumer, where the consumer now can say, okay, I can be, on another continent because I travel for a business or whatever, and I can close a loan, or I can be in one state and my closings in another state, or I can be signing from my house. So yes, I see it's influencing the entire transaction all the way through.
And you brought up e-closings, and I forgot where I saw this week, but I think the percentage of closings right now that are digital are like 4%. It's very low when you think of what the technology could be, how promising it is, and quite frankly, even how much we hear about it. Is that something that you're doing at all right now at Draper and Kramer? Is that certainly something you're planning on?
Yeah, we're doing them. They're very limited, just like what you said. Really, when you take the technology and you say, okay, is it workable? Is it secure? Is it safe? Is it a saleable loan?
Yeah.
You work out all those pieces, but then you have to take and say, okay, what's the input mechanism that the human labor takes to put that in? And in the beginning, we started to offer them on a limited basis. What I was hearing from the title companies and from my own internal staff is, hey, I have to do more input to do that e-closing. And then I heard the title company saying to me, hey, it's actually more work for us to do that e-closing. The consumer feels it in a way that's a little bit simpler, but nobody else does.
And what's leading to that work? Just kind of the admin side of it, or making sure?
Yeah, I think probably the code and the technical writing of the products and things like that. And so, if you're in any business and you have something new that is going to be a little smoother for consumer, you always want to do it. And our momentum is obviously all in that direction. But the other side of that is, if you have a demand where you've got X number of consumers you have to execute in a day, and you kind of go, we'll call it old school. A few years from now, we'll call a regular closing old school. It's on its way to being old school today, but it's not. But I think everybody's kind of going old school and saying, we just got to crank out as many of these closings as possible. And I think when we come out of this thing, the e-closings is going to really be a leading piece, I think, in the industry. And that some of the more recent technologies that people have built for e-closings are much, much smoother. And so I'm looking to see us adopt more of that over the next several months at a much higher percentage.
That actually segues well to one thing I wanted to ask you, we talked a lot about this year and looking backward, but how are you thinking about 2021 and kind of planning into the future in this new normal, to use another term that's been thrown out so much in the last year?
We expect rates to stay basically in the same range, probably slide up higher as the vaccinations take place and as we see some new transitions with the new administration and all. But I think we feel pretty safe that maybe we're going to see a few wild swings, but that rates are going to stay generally good for the next year or two, which leads us to a good place for purchase market. And I know that, builder sentiments were, 83%. In December when they were polled. So that's a good thing. And there's a lot of housing starts that are pent up for new homes. So I think looking to 2021, I look at it and go, hey, this is going to be a really good purchase year. And last year was a better purchase year than anybody expected. And so I feel there's good volume. I think volume is going to stay high for several months. I think that organizations in 2021 are probably going to be able to maybe at moments have a little bit of a breather where they can look at their staffing, because last year I think organizations were scrambling to grab bodies, and this year then they need to look at them and go, okay, where has technology merged with labor, and where's our efficient spot, in our processes, in our workforce, and in our technology, so that we can, continue to move forward for years to come. Because I know at Draper and Kramer, we're a 127-year-old organization, so we're not thinking just about today. We're always thinking about tomorrow and beyond.
Well, makes a lot of sense. And you would reference kind of your playbook for loan officers in the sales playbook. How does that differ on the refinance transactions versus the purchase transactions? What things will loan officers fundamentally do differently? Obviously, some relationships like realtor relationships, but what else beyond that?
Well, a lot of the practices for what we do for loan officers would be realtor marketing or builder marketing or financial planner marketing, prior client marketing. Those are, you're able to have a lot of products in the marketplace that we're fortunate to be able to use to build to that. For your consumer on the refinance, we're more driving towards the value proposition of what they have today and what a refinance looks like. So that's where spending the time talking to them about the financial structure of the transaction. So there we're more using products and data that can help us sell to somebody. Is it the right time for me to refinance or is it not? What's the right loan size for me? What's the right term for me? Am I better to go to a shorter term, pay my home off earlier? Better go to a longer term to help my budget, because now maybe my family has some economic inconsistencies because one partner has a very solid job and one partner has a very sketchy job because they don't know where the economy is going regarding, COVID and things of that nature, depending on the industry you're in. So I think the difference is one is data driven, financial data driven, and the other one is more relationship driven and opportunity, looking to mine for the opportunities when there's a potential buyer.
Right, with the purchase being more relationship and refinance being a little more data driven.
Yeah.
And
now,
then
obviously, at the end of the day, we want to have a great relationship with everybody, but it's just it's the nuance.
Well, and also I think one thing that is a struggle for this business in general is this a technology business or is this a relationship business? And I think the answer is both, but how do you balance that when you're training your team or dealing with customers?
Yeah, I kind of look at it like the movie RoboCop. Like you got to have half man, half machine. That's what I look at it like. And my loan officers are not going to be successful unless they have great technology. They're just not. They're not. There's a shelf life if you're not willing to chase the technology. Right. But there's a human piece where people, I think, all of us in life want to have human comfort. Why does somebody listen to a blog? They're interacting with human beings and listen to information. Now we're using technology to execute it, but we know it's about who you know, how you value somebody. Do you have a genuine human concern for your consumers? Did you look out for their best interest? I think that intention, if it's the buildup of the person we have, the ethics and the character and the commitment that our loan officers have to the consumer, it's going to be felt, and they're going to feel like, hey, I've got all of my data on, Matt Patterson's my loan officer. I can pick up my phone and I can go ahead and I can go to just saw a picture of my grandkids real quick, but I can pick up my phone and I can get everything I need from a technology basis, but I also feel like if I've got a curious question, I can call my loan officer up and communicate with them.
And I think I love your answer, and I'm already thinking of image of the Terminator, RoboCop in the middle, and then kind of the person on the other side of like, you want to be right in the middle, the perfect fit. And I think you touched on that. For me, the technology kind of becomes table stakes, where you need that because you need to be able to pass that information along and have that seamless experience. But I do think that the relationship is very much being lost, especially on the lenders that approach it more like, Terminator and full on robotic, which, there are plenty out there.
When I started in the industry in 1982, I used a day timer to schedule myself. Then it went to, I have a computer, and now you can get your schedule on your watch or your iPhone. So, but the main thing is technology has changed, but it also changes how as we're talking about, how I manage my day and my time to the best opportunity.
Yeah, and I think the folks like yourself who've been successful are able to leverage technology to keep that relationship part of the business too.
I agree.
The last question that I have that I like to ask is, what, from a work or business perspective, what gets you excited in the morning? What gets you up, after being in the industry for going on 40 years now?
I really like helping people have a stronger, better career. Like that really excites me, to be able to talk with someone, strategize with them, build, a team around them as a producer, understand how they can sell to their personality. One size doesn't fit all. So what really drives me is I get up in the morning and thinking I can help somebody that worked with me today be better at what they do and more successful at what they do. That to me, honestly, is like it's like breathing to me. That's how it's natural to me. It's how I get up each day. What keeps me up at night is trying to end every day with all my emails done or having them asterisk for the next day to start my to-do list.
I like that. Yeah. I mean, at some point, I think you just have to shut it off. I made the smart decision, I think well over a year ago, of turning off my notifications so things don't kind of beep in the middle of the night.
Yeah.
It's definitely one thing I recommend. No, I love that. I think creating that job and helping people sell in a way that makes sense for them is just so important. So that's such a wonderful answer. So thanks so much for coming on, Matt. Is there anything you want to plug, promote, how people can find you?
Well, Draper and Kramer Mortgage, DKMC. You can go online, find Draper and Kramer Mortgage.com or DKMortgage.com. Our company is in all of the states in the United States today, other than Hawaii. And we've got a very good reputation and loan officer staff, competent across the organization, and would love to help any consumer out there that could use us.
Perfect. Thanks so much for coming on, Matt. This was fun.
All right. Thanks. Have a great day. Appreciate the time.
Right. Thanks. Thanks for listening to Lodestar's Lending Leaders. Please like and subscribe wherever you get this podcast. If you have any ideas for upcoming episodes or would like to be a guest, please reach out to us at lendingleaders@lssoftwaresolutions.com. Hope to hear from you.